On today's episode of the Cryptoverse. I now have a sufficient number of requests to do a dedicated video on security token offerings, which is an alternative to initial coin offerings. So that's the topic I'm going to cover today. Since this is again a single topic video, I'll do my best to timestamp it at relevant chapters, but other than that, they'll be down in the description as always. Now, in a bear market, the two most important things to consider are investing in your education and gathering as much crypto as possible at the best prices possible. So I've created two such opportunities for you. Number one is to become a student of Cryptoversity, which is my online school, which will teach you a range of different things from blockchain security to the history of money, all the way through to trading cryptocurrencies. You can find that down linked in the description. That's Cryptoversity, my online school. And then also, if you want to earn a passive income in Bitcoin and sort of gather as much crypto as you can, then that's also linked down in the description. There is a scheme where you can help me promote the online school and earn a passive income in Bitcoin. Other than that, we're going to get into the show. So we're all at least vaguely familiar with ICOs, right? So initial coin offerings. I define this as an event where a new crypto asset comes into existence. And it's also the time when it's distributed to its first ever group of owners, usually by selling it to them, right? Now, the purpose of the tokens that are sold in these initial coin offerings is typically like a bespoke currency that is going to be used for a specific purpose, like as a currency inside a specific app or a specific ecosystem to pay for a specific service. But it's a bespoke currency, basically, for a little special ecosystem of its own. Now, one of the biggest criticisms of ICOs is that unlike stocks, they do not represent an ownership stake in the company that is behind the projects, right? It's typically more like an ownership stake in the network that the company is building, or I suppose you could also consider it an ownership stake in the product they are building. So buying a stock in a startup, that's risky enough on its own, isn't it? But buying shares in a network, right, these new cryptocurrency networks, well, that's just stacking the risk even higher, isn't it? But that isn't even the biggest perceived risks of ICOs, right? The biggest concern is that the token that's being launched will be looked upon by some regulator in some country as being a security, right? That's the concern. And if that happens, then the project's at risk of being investigated, fined, and then even shut down, potentially rendering the token that people bought in the ICO worthless. So I think that's the biggest risk of them all. So thus this gave birth to a new discussion about STOs, which is a security token offering. So security token offerings, they do not try and navigate or wangle around the regulations. They just simply run directly towards the regulations, right? They just accept the likelihood that the token they're launching is going to be considered a security. And they just make it into one from the start, right? Rather than messing about, they just go, okay, fine, let's just go straight. We're a security, that's fine, we'll comply. And then there's no risk there's no regulatory risk, right? So it's basically just the tokenization of securities, of traditional securities, and turning them into tokens instead of holding a share certificate, right? So instead of a share certificate, you holding that as a piece of paper saying this is proof that I own this share. Instead, it's the ownership of a digital token that means this is a proof that I own the stock, right? That's the only difference. It's as simple as that, quite frankly. So this significantly upgrades the securities market, the old financial system, since you suddenly get all of the flexibility of the frictionless token transfers that we've come to know and love from cryptocurrencies, but with the regulatory oversight, which is designed to reduce fraud and protect investors and so on. I'm not saying I agree with that. I'm just saying that's the purpose of regulations as according to the regulators themselves, right? So that would be their argument. Now, I would say that the biggest criticism of these STOs, these security token offerings, is that they're just so hard to launch, right? It just greatly slows down innovation. The very fact that ICOs were a field of permissionless innovation was the main reason why they exploded in 2017, because anybody was able to just try any idea that they wanted to, right? There was no restrictions, and that's where the permissionless innovation exploded, right? STOs, on the other hand, right, because they are designed to be compliant with regulations, they require a lot of paperwork before they can be launched. So I was watching a Chris Dunn video the other day on his channel. Here it is. It's called Crypto Bear Market Analysis and My 5 Plans for 2019. So in this video, he goes through his outlook for 2019 and he talks about STOs. So he says he expects many of these STOs that will be launched next year in 2019, he expects them to be backed by hard assets. And he specifically says such as real estate, he thinks is going to be the first major hard asset class that's going to be tokenized with these STOs. Now that's great, but like I've been saying, if what Mike Maloney is saying is true, if we are in the everything bubble in traditional assets, what good does that do us? What good does it do us to tokenize an already overinflated, overvalued asset? Doesn't, does it? Right? If we weren't going to invest our money in real estate anyway, why should we invest our money in a real estate STO? Remember that all the Wall Street types, right? They have an objective to make money for themselves, not us. That's not their goal, right? If you've ever seen Wolf of Wall Street, that's probably the best example of that, right? So STOs, this is my concern, STOs could just be Wall Street's way of, it could be their new way of scamming money into traditional assets, which are already overvalued. So they may use the hype around crypto and blockchain technology to bamboozle uninformed investors into missing the fact that the underlying investment is still a traditional, say, real estate deal. It just so happens to have tokenization as the administrative and the ownership model, right? So that would mean that the returns are the same, right? It's still a real estate deal and the economy is still in the state it was in. It just so happens that the process being used to administer the ownership is a crypto token, which should only have a very slight influence on the investor's decision, right? The fact that it's tokenized doesn't really improve the appeal of the actual investment opportunity. The returns are the returns. The STO thing doesn't really impact the fundamentals of the investment case itself. That's the point I'm trying to make there. So in addition to that, this was something that I said to one of my consulting clients on the phone the other day. I said to them, remember, the Wall Street business model is not to help you pick winners. Yes, they get a performance fee, like if they're a hedge fund manager and they make gains, but they get the transaction and management fees no matter what. So it's safer for them as a business model to come up with new schemes to get money moving in and out of the system so they can extract rents in the middle. So this is why I'm concerned about the STOs and how this could be a bit of a wolf in sheep's clothing, to use that phrase. So I'm not fooled by all the smoke and mirrors, though. This is why I'm saying about the fact it's an STO, I don't really care, right? What's the underlying investment case and is that sound? So the use of crypto tokens, again, to improve the administrative process, that's great because it reduces cost and friction. I like that. But I just said that investing in an STO or using an STO to administer the process should only have a very slight influence on your investing decision, right? And my fear, again, is that this is exactly where retail investors will get bamboozled, right? I believe that many retail investors will be far more influenced by the fact that it's an STO and it's one of these newfangled crypto tokens, which will result in the average retail investor perceiving this real estate opportunity to be bigger than it really is. And that, I think, is what Wall Street types will use to their advantage. So I love the fact that STOs get people used to digital assets and wallets and so on. That's great. But I think that the Wall Street types what they're going to do with these STOs and saying like using STOs and the hype around crypto, that's almost like them launching a new drill and then telling people that the launch of this new tool is the reason why you need to drill a hole in the wall, right? That's my metaphor. If you need to drill a hole in the wall, if that's the result you're looking for, if you want a hole in the wall, well, you know that before you go looking for a new fancy tool. And STOs are a new fancy tool, which only facilitate an existing good investment opportunity. So, if you think it's a good time to invest in real estate, I keep using that as an example because it's easy, and Chris Dunn set me off. So if you think it's a good time to invest in real estate anyway, only then does an STO become relevant, not before. So I think I've made my concern pretty clear there. So let's end on a positive note, shall we? What STOs will do, in a positive sense, is they will open up investment opportunities to citizens of the internet, right? Rather than just the citizens in the country that the investment is in, or in countries where they have brokerage platforms that list the particular asset for sale. So I see us traveling through this period where there are a lot of these hybrids where we mix the old system with the new system. And tokenization of traditional assets is a perfect example of one of these hybrid models that I'm talking about. Now, I'm fine with this because every inch of progress that we make into the crypto world, even if it's only tokenization of traditional assets, that's progress that cannot be reversed. Once you get the benefit of the frictionless and reduced cost of the crypto tokenization model, it just makes there's going to be no incentive to go back. So that's why I don't mind. As long as we get a step of progress, a hybrid is still a step of progress. Now, if you want a couple of real projects that are leading the way in the terms of the new world of STOs, security token offerings, here's a couple that I suggest you check out. The first one would be Polymath. So Polymath have their ST20, which is their security token standard on Ethereum. So that's an Ethereum one. You've probably already heard of Polymath. And the other one is one of my new favorite projects, which is Worbly, which you can check out. It's WORBLI, Worbly, which is based on the same technology as EOS. Now, both of these projects have the same key feature, which makes them perfect for STOs, which is registering the identity of their users as standard, right? Because without that, without the know your customer and the anti-money laundering regulations, which require the identification of users, without that, any tokens that are launched are almost guaranteed to fall foul of the regulators. But that is all I've got for you today. So if you liked this episode, go ahead and hit that like button. And if you really liked it, hit that subscribe button. And if you would like to get rid of the ads on the Cryptoverse, if you would also like to support the production of the Cryptoverse, and if you would also like to earn cryptocurrency rewards for watching to the Cryptoverse and listening to it, check out the website, thecryptoverse.show. If you go there, click on the big blue button in the top right-hand corner that says Get Paid to Watch. That will explain to you in a couple of minutes how to get rid of the ads, support the show, and earn cryptocurrency rewards. Other than that, I will be back with the next episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.